Okay, hello everybody, and welcome to our Madison Heights IBD meetup with for April 2023. Tonight we have Raja, myself, Keith, Francisco, Talgent, Ron, and Cookie. As always, the content you see in this presentation is just for a starting point for your own research. And in no way should it be considered a buy or sell recommendation. So the market status as of Friday night was a confirmed rally. We have 3 distribution days on this new confirmed rally. Our last meeting was this red M here. So we were in a correction for about a week and a half. Then we switched over to green, confirmed rally ever since. Let's see, the IBD 6000 accumulation distribution buckets, the A, B, C, D's, and E's seem to be heading in the right direction. We went from 427 up to 707 in the A's, the E's 956 down to 634. So that's pretty much exactly what you want to see. So all is well in the markets, supposedly. Here's our Dow Jones Industrial Average as of this weekend. It's close. The red bar was our last meeting, so since it was at the 200 day, it's just taken off and gone. I mean, pretty much straight line up. This is the Dow Jones, even though the volume seems to be tapering off, but still, all in all, this is exactly what you'd want to see. Nice trend uptrend. S&P 500, similar story, not as strong as a pitch, but it's heading up nicely. And the Nasdaq, same story. Nice controlled ups. The red volume is below the average line, so that's exactly what you want to see. Here's our Nasdaq blow up. So here's our last meeting, and notice how all the lines were coming together, and then right after our meeting, they just took off. This is something you don't see all the time, but it's pretty clear uptrend, even though it's not. It's something doesn't seem to be quite right, but it's heading in the right direction. So that's all we can hope for. Here's our RRG relative rotation graphs. This is our the S&P 500s by sectors. So this is last month's, and this is the current month. And I've been following this Julius D. Campanera. He's the person that created this at Stock Charts, and I've been watching a few of his videos, and he's a very smart person to come up with this. But according to him, when they're in this the worst quadrant, and then as they turn up, that's kind of like where he likes to see them. So notice from last month to this month, here's UUP, which is the dollar, and then notice where it is now. It's like changing direction, and then now it's in the improving. So this is exactly what you'd want to see for those. And here's XLU, and notice how it followed right through there. XLU and XLV, XLV, and this is just a different way of looking at everything, but it's relative strength. It's a different way of looking at relative strength. This was Cookie's request to look at this. She gave me another one, but I wouldn't take it. This is Tesla versus Tesla Bear. So here's Tesla, as you'd expect. It's in the leading quadrant, and it's measuring the difference between these two, only in these two of the population. And here's the short. So it's exactly what what you'd expect. Even though Tesla seems to be coming down in the last week or so, and the short is advancing. So I don't know. Who knows? Maybe Tesla's getting ready for a correction. I don't know. Just interesting. Here's our IBD 197 subgroups. This is the 3-month sort, the top 20 or so. We have retail apparel, 5 of them, steel, mining, 5, oil and gas, 3. So oil and gas has really dropped off quite a bit from leading as it was. This is the 6-month sort. Oil and gas has 9, oil, gas, energy, 9 of them, and retail 3, medical 3. So things are changing in this new uptrend quite a bit. It's not so dependent on the oil and gas. It seems.
Just one word here.
Sure.
When oil and gas pulls back a bit, the one that outperforms all the time is the oil and gas royalty trust. You'll see that the others will go down more and that one will hang in there. Okay, back to you.
Okay. Yeah, that's a good point. Okay, so here's our last month, March 2023, the stocks that we reviewed at that meeting. The winners are, we had one stock that beat the S&P. S&P returned 5%, 5% for the 30 days. And Cookie had 3 of the 4 winners. So we had TPH, HUBS, 4, and PODD. Really nice looking chart. So this is 2 consecutive meetings that this was a top performer. I think Cookie had it the prior meeting, and then I picked it last meeting. But this is a pretty strong stock. All of them are, but I just noticed that when I was preparing this, 2 consecutive meetings, this was a top performer. So, okay, on to our stocks. So we have TGLS, Technoglass. Technoglass is a top performer. Let's see, it is a manufactures tempered, safety, laminated, and thermoacoustic glass for commercial and residential buildings. 33 of 197, so it's a top stock and a top group, and it's got a nice looking pattern. I mean, it was in this base third quarter of last year, and it was going up and down with the 200-day, the 50-day. Then it just took off, and it hasn't even come close to touching the 50-day. Well, I guess it has come close to touching it, but it's pretty much been above the 50-day ever since. And it looks like since it broke out in the last of about November, the volume, it seems to have pretty much doubled since the second half of the chart looks a lot bigger than the first half to me. Mostly blue bars, nice, not really wild, chaotic, really tight price patterns, and it's a top stock for sure. 98 relative strength, something you might want to keep your eyes on. Fundamentally speaking, it's a let's see, it has a up-down volume of 1.7, very strong. Accumulation distribution A, Smart rating, SMR rating A, composite rating 99, timeliness A. So this is a top stock. We have 121 funds, no A plus funds, but it does have 148 or 121 total funds. 48% debit. It pays a yield, it's small yield, but it does pay a dividend. Earnings per share this year, 17% and 8% next year. So this is something you might want to keep your eye on. Return on equity, 53%, PE ratio, 13. So this is that Warren Buffett style type of stock. He uses many other indicators, but this is one of the things that I've seen from him. He likes the return on equity to be twice as much as more than a PE. He doesn't like the high PEs. So this is an ideal one for him. Another cookie stock, we have ELF, ELF. So this is let's see, manufactures and markets cosmetic and skincare products under the ELF brand name. Let's see, number 9 of 197. So again, top stock and a top group. 99 relative strength. Very tight price action all the way up. Then it looks like earnings possibly, nice gap up, and it's barely touched the 50-day. So you had a chance in January to get it at the 50-day, but I mean, this is just nice, tight, very calm, orderly price action, and looks to be way more blue bars than red. So it's top stock and a top group. Let's see, fundamentally, this year, earnings per share, 69%. Next year, 11%. Up down volume 2, which is very good. SMR, accumulation distribution, composite rating, timeliness, all of them very, very high marks. It's like this is an A plus student right here. Let's see, PE 64, return on equity 16. So this is the opposite of what Warren Buffett would, what we just talked about. But still, I mean, Bill O'Neill, he said PE is one of the few things he looks at. You're going to pay for top stocks, and that's what this is, a top stock. So debt 29%, not too out of line. Management 8%. So that's something you might want to look at. I mean, the earnings are just really taken off. Another one from Cookie, TPH Tri-Point Homes. So that's build single-family homes in planned communities in major metropolitan areas. California, Arizona, Nevada, Washington, Texas. So it sounds like southwest. Yep. Number 10 of 197. So another top stock in a top group. So this has got the big cup with a handle, small gap, and then it's got another flat base. So it's a pattern, base on base pattern is what it is. Slight elevation from one to the other, but not much. So this is a very strong pattern. 50-day across, the 200-day looks about January, and it hasn't looked back really. It's just getting stronger and stronger. Looks like we had a gap up here mid-February, which possibly earnings, and Nice tight price action riding up. 95 relative strength, another good looking stock. Fundamentally, we have up down volume 1.5, pretty strong. All of the SMR ratings, accumulation distribution, composite ratings, timeliness. This is very strong, A's and B's, so this is very, very strong. Debt 49%, not outrageous. Let's see, no A+ funds, but on the, okay, so on the weekly chart, which you can't see, there is a blue dot. So that's indication of a, just out of a base and a new relative strength high. So that's a power symbol they have, IBD has. I think I have one you'll see in a little bit here. Return on equity 22%, PE ratio 5. So this is Warren Buffett-ish, I guess we could say, which this was how the oils were maybe a year ago. They were the low PEs and they weren't getting any respect, but now you've seen what happened to them. So that's kind of where these home builders are. And there's a bunch of them. Okay, here's another one from Cookie, Rambus, RMBS. RMBS, what do? Well, they're design, interface, memory, security, and digital architecture for computing, games, graphics, and electrical computer equipment. They have number 1 of 197 in electronics semiconductor fabless. So they design it. They don't necessarily manufacture the chips, but they design it. And they're leading number 1 out of 197 groups. It seems to nice tight price action. Left this flat base. Looks like about October, November. Tight price action. It advances, then it's sideways. Hits the 50, advances, sideways. Hits the 50. That seems to be how it travels, but it's the top stock in a top group for sure. 98 relative strength. So let's see. Fundamentally, we have 1.2 on the up-down volume ratio. We have, let's see, group relative strength, SMR rating, accumulation distribution, composite. All of these are A's and B's, so very strong. PE 78, return on equity 9, so that's, you're paying up for, strength is what it is. Powerful company. Now this one here does have a A+ fund, a single one. So it does have an A+ fund, and it has 588 other funds. So this is a one you might want to keep your eye on. 56% earnings per share this year, followed by 24% next year. So.
And 34.9% money going to R&D, going back into the company.
Right. Yeah, no, they got these chip companies, they have lots of money. They're money machines. There was a very good article, I'm going to say in the last month, front page of IBD on the chip sector. There's winners and losers, and Rambus is one of the winners. So it's a good article. If you haven't read it, I recommend it. Go to your library or get it somehow. But Rambus is one of them. Another one from Cookie, we have PERI, Perian Network. Communication services, advertising, 64 of 197 subgroups. So it's not as strong group-wise as the first few stocks we've seen, but still, I mean, the pattern speaks for itself. It's nice, tight price action. I mean, it barely touches the 50-day, and then it goes. Touch the 50-day, goes. And it has not even, so since round about the end of the year, December, January, it has not touched the 50-day. It's just moving up. And again, it looks like about the midway part of the chart, the volume has pretty much doubled or at least increased from the first half of the chart. So, and a lot of blue bars. There's red in there, but there's a lot of blue bars. Very strong chart. It's an Israeli-based provider, or provides digital advertising solutions to brands, agencies, and publishers. So, sounds like some sort of a digital advertising company. Strong group. Fundamentally speaking, it is up-down volume 1.5. That's very strong. So if you had a one with up-down volume of 1.0, that would be like a baseline. You wouldn't really want to see it below that, but anything above that is good. 1.5 is very respectable. 2 is, outstanding, and the higher is better and better. But 1.5 it's very respectable. Let's see, timeliness, that's another measure of supply demand. So that's A. I mean, these are all AA, 98 AA. Okay, so the group relative strength, that's because it's a 68 out of 197. But other than that, I mean, it's all A's, straight A's, except for that one. Its peers are dragging it down. The chart doesn't drag it down for sure. Earnings per share, 30%. Earnings per share growth rate, 30%. This year, 8%. Next year, 9%. Return on equity, 23%. PE, 16. So that's ideally, that's Warren Buffett right there. I mean, this is not too expensive according to his measures. Return on equity, 23. Yep. Let's see. No, there's zero A plus funds. However, there are 168 total funds. It's a good looking stock. Let's see. Okay, so now on to mine. Remember, Cookie leads the current month 3-1, so she's got the magic touch. Anyways, here's a couple of mine. KBH, we have another home builder, KBH Homes, building residential commercial, 10 of 197 subgroups, single family attached detached homes, townhouses and condos in 9 states across the U.S. It's not as nice of a chart pattern wise, but it still seems to be pretty much above the 50-day from like November, even though it's spent looks like a good couple of 4 weeks at or below the 50-day, but not excessively below it. It's got a nice cup with a handle right now, so it's 2% to the pivot, so it's not extended. And again, these charts are from over the weekend, so it does not include Monday's price action. But so in the cup, you see that was probably earnings, but they had a gap up and then it came down. It looks like it did violate the low of the gap, or yeah, the low of the gap, which is not ideal, but it didn't violate the handle, so it's still coming down. Generally low red volume, even though there's looks like one and two are above it. So, but overall, it's pretty low volume, mixed, I guess you'd call that. But it's something you might want to keep an eye on. The home builders are top groups. Let's see. KBH fundamentally, 1.3, so it's a little weaker, but it's still above 1. It's got a 1.5% yield, dividend, small dividend, return on equity 24, PE 4. So if you look at these home builders, you'll find several that are like that. So it reminds me of the oils, like I said, where oil was maybe a year, 2 years ago, probably 2 years ago, undervalued, and it's just coming to life. Earnings per share, group relative strength, all of those measures are A's and B. So A's and B's. Management owns 4% this year. So the earnings per share are going to be down by 42%, which is similar to most of these home builders. This year it's going to be down, but then next year they're saying it's going to be up. So it might not make sense. Why would you buy them now with rates going up and all of that? But the data speaks for itself. The bottom line is these are number 10 of 197 subgroups, so it's leading all the stocks, home builders. And continuing on that theme, another home builder, MHO, MI Homes, single family homes and townhouses for first time, move up, empty nester, and luxury homes. So this chart is it's choppier, but it's still about the midpoint. It's not violating the 50 days. So, and it's in the cup with a handle. So 3% to the pivot. So it's still not too far extended. A lot of blue volume, and that there, the tail, that's ideally what you want to see. Lower volume, lower red bar volume on the pullback. So that's what you want to see. Now we want to see a breakout. But yet another home buyer or home builder. And similarly, this year we have the negative 37% earnings per share, up down volume 1.3, very similar, debt 45%, return on equity 27, PE ratio 3, it's very similar. And all of these measures up here, A's and B's, so they're very similar. This one, again, no A plus funds, but it does have 467 funds. So we got a couple of home builders for you. Let's see. We have this NOA, North American Construction, which is 62 of 197. Oil and gas field services. So this is a big cup, a gap, and then it looks like a flat base. So it's base on base. That's what I like about this. Whenever I see that pattern, it does draw me to it. 96 relative strength. Seems to be from third quarter of last year, once it crossed the 50-day, it touched it, and then it touched it again, but it really hasn't come through it. It's holding up well. It's not a straight line, but the price action is pretty tame, really. I think it is. Almost like a double bottom here, but it's not a double bottom. Something you might want to keep your eye on. North American Construction. Let's see. They have 1.2, so we're still above the 1.0, so that's okay. Yield 1.6%. Smart rating, accumulation, distribution, all of these measures, except for the group is pulling it down, but it's pretty good. Sponsorship rating, NA, I mean, there's only 93 funds that have it, no A+ funds, so that's low. Debt 124%. So earnings per share, a dip this year, 25%, and then 2% increase next year. So it might be something you want to keep your eye on. And let's see. Floor and Decor, FND.
This was today's stock pick.
Oh, was it? Okay. Retail, wholesale building products. So I've driven by their stores. I haven't gone into them, but it seems to be like I don't know, like a Home Depot for flooring. But I've never been in the store, but it's a top stock for sure. And again, with this cup with a handle, small gap in between. So it's base on base. And the high up here on the left-hand side was 102.15, or the start of the first cup with a handle, 102.15. Start of the second cup with handle is 102.61. So I'm going to call that pretty much horizontal, base on base. Very strong. And Cookie said it was the stock of the day. So 93 relative strength. It's a choppy stock. It is choppy, if you notice. The 50-day line, it just crossed the 200-day here in mid-January. But, I mean, since August of last year, it lived below the 50-day for basically the summer, fall. And then it lived at the 50-day, then it was above the 50-day. Now I would say we're at the 50-day, so we'll see what happens. But according to this, over the weekend, 1% below the pivot, so it's still cup with a handle. I mean, that's what you want to see. Now we want to see we want to see it break out with the cup with a handle. I mean, with a high volume. So we'll see. There are, okay, so fundamentally, this is a pretty strong stock. There's, let's see, this year, earnings per share down 2%. Then next year, up 26%, up down volume 1.6. So that's pretty strong. Debt 24%. Return on equity 20. PE ratio 36, so that's opposite of Warren Buffett style. All of the fundamentals up in the money ones, EPS, SMR, accumulation, distribution, composite. I would say that's A, B's, and we got a C. So sponsorship is only a C. That's kind of surprising, because they have, let's see, 1, 2, 3, 4, 5, 6. They have 6 A+ funds plus 558 funds. Even though I guess year over year that's kind of flat. 535 last June, this March 30, this of 23, they got 558. So it may not be increasing enough for that sponsorship rating of C. I'm not sure what that is. EPS growth rate, 32%. Let's see. It might be something you want to keep your eye on. It's a top stock for sure. Another one, Crocs. Everybody knows Crocs. So it crossed the 50-day, crossed the 200 in the third quarter of last year. Been rising ever since. Recently, it's living at the 50-day. It's with a cup, blue dot. So that means we're in a pattern and the relative strength is at a new high. So notice we're in a cup. So, I mean, it could be a cup without a handle, or it could be a cup with a handle. Either way, though, it's 6% from the pivot. The pivot is this horizontal line. Notice the volume is drying up. So would need to see it. Ideally, would want to see volume pick up as it goes to the pivot and then either pull back or plow through it. But either way, it is pretty, it seems to be riding a 50-day. Fundamentally, Crocs is a, let's see, up, down 1.5. The measures here, A minus 99, B, C, sponsorship rating C. There are 3 A+ funds that own it, and it looks to be about 675 funds in total. 280% debt. Return on equity, 163%. And PE of 12. So I have been in one of their stores in I think it's Lakeside Crossing, and on my way to the Apple store, and they sell like it's like a, I don't know, it's kind of like it looks like a kind of a sandal to me. I don't know how to describe it. It's like a rubber or a plastic rubber sandal. So I'm looking at it and it's like, that's all they sell. But then I'm thinking, if they manufacture that, so if they have the molds for these and I mean, their cost has got to be very low. And that would explain the return on equity. I mean, this is like a super high-tech software company. I mean, Microsoft in its heyday had a return on equity of like 160%, but this is very profitable. But still, all they sell is one basic product. But it's a top stock. So another top.
Doctors, nurses, and kids wear them all the time. They are very, very popular.
Yeah, they're very It's like the people that wear them, they love them. And yeah, so they're machine washable and all that. So yeah, I get it. It's a good one. And in this group, we have Deckers, Skechers, Adidas, Nike. Then we have this On Holding. I don't know if you're familiar with that one, but it's a newer stock, and it's been getting a lot of press in IBD lately, and that's also something you might want to look at. But it seems like the chart is the price is a little bit ahead of itself, but it's from the shoe group. I don't know if I mentioned it, but okay, so it's actually 15 of 197 apparel, shoes, related manufacturing. So manufactures women's, men's, and children's footwear made with proprietary resin material called CROSITE. So they manufacture. So they have the dyes, and they have this resin composite formula, top secret formula that they use, and that's what makes it so soft and so comfortable for these folks that wear them. And I mean, it's a money machine. I mean, I don't know how else to say it. It's a money machine. But uh, oh, and on the year chart, it also has a blue dot. So it's at the relative strength line is at a new high. Oh, well, no. So it has it on the year and the weekly. So a double blue dot, which is pretty rare. So might be something you want to look at. And one more stock. This is a bonus stock. I happen to see Southern SCCO, Southern Company, copper. It's a miner, and it's in a double bottom. So, which is, I mean, that's a pretty nice double bottom pattern, even though it's a copper miner. But let's see, copper miner. It's group number 31 of 197. Mining ores, engaged in the mining of copper, and operates mining, smelting, and refining facilities in Peru and Mexico. So if you ever wanted to get a copper miner, this might be one to look at. 94 relative strength. And okay, so fundamentally, I put the chart up, which I don't normally do, but this is the yearly or the weekly chart. So these are weekly bars. And so there's a few things that look interesting to me. You have a small base. This is in March of 2021, right? Flat base, gap, cup with handle. Looks to be about a year, maybe a year and a quarter, maybe, well, no, that's, call it 6, 7, 8, 9 months. That's a big, long cup with handle, another gap, another cup with a handle, which is where we're at right now. And we have the blue dot indicating a pattern and a high and a new relative strength high. So you got a lot of positive things going on here. Even though these copper miners are, they're not like, I mean, they're it's feast or famine, it seems like. So, but this one here has got earnings per share 9% this year, 24% or 17% in 2024. So 9 and 17. The other measures are, this is not an A stock. It's probably B plus. Earnings per share rating 71%. Let's see. Return on equity 33%. PE ratio 24. So it's creeping up there. It's still good, but it's not. I mean, it would be better if you were to buy it down here as opposed to, this is like the top, right? It's the top. Yield 4.3%. 0 A plus funds, but there are 700 funds that have it. Some of the other ones in the group are this SGML. That's the lithium miner we talked about a couple meetings ago. TECK. That's another. These are all miners, but this is I believe, a rare earths. Another copper miner, Freeport McMoRan. I've had this for a while, but these miners it costs a lot of money to mine. I mean, all that equipment runs on diesel, which is very expensive fuel, plus the humans and strikings, and a lot of foreign countries, they have governments, the governments, it's very costly to mine. But to give you an idea of it,
can you go back to that slide for just a second?
Yeah.
If you look at earnings per share, their earnings per share rating is 71. All of the other ones are below that in that particular group. So it is the leader in that group. It was also the stock of the day on the 3rd of April.
Yeah, it's a good stock, but I mean, I've had it for a while, but it's a tough business. So, and how they do, okay, so how they do their dividends, okay, so if it says 4.3%, does that mean 4.3%? How are they getting their number? This is a Market Smith number here. So this is from Schwab, and this is the actual payout. So you can see how it varies. Q2, I mean, they're raking in the money, and it's all based on the price of, or not all, but a large part is based on the price of copper. So they were paying out $1.25 a quarter. Then the price of copper dropped, so now it was 75 cents a quarter. Then it dropped to 50 cents. Now this year, Q1, we're back up to $1. So it just gives you an idea of the, it's wild. If they got it, they spend it. If they don't, they pull it back, which is what you want your management to do, really. I mean, if you think about it. And okay, so one other chart here on this. This is his historical dividend payout. This 2021 was when President Biden took office. And this other one to the left of it, 2020, this is when we were hot and heavy with the ESG movement, and oil was bad, and I mean Exxon was like $35, $40 a share. BP was like $12 a share. Chevron, I mean, it was incredible. I looked up the prices on this, and so that's when this shift went to this EV, and you can see how it's just copper is it's a historical metal used in for 100 years, and it's copper is copper, but now all of a sudden it's more because we're going to use a lot more of it, supposedly. So, okay, let's see here. Okay, here's our yield curve. I just done this a few minutes ago today. So this is today, this is last month's data. The U.S. Treasury yield curve, 1, 3, 6, or 1 month, 3 months, 6 months, all the way up to 30 years. Here's the payout, 3% up to just about 5%. You can see it's below, it's call it 4.75 for the 6-month Treasury bond last month. This month, notice they've added 2 time periods. So now they got 1 month, 2 month, 3 month, 4 month, 6 month, all the way up to 30 years. But notice how it jumped up. Now it's 5.2%. So the yield curve is still increasing, and I don't know, what does this mean, but I guess that's where we're at. So, and that's about it. So as always, follow the market direction, track your distribution days, which we're at 3 right now, buy the best stocks. Hopefully we gave you a couple ideas tonight at proper buy points, and take profits regularly and repeat the process. Thank you very much.
Good job. Put your hands together. Come on now. Good job.